Good afternoon, everyone. This is Thomas Wood with Microquant. Once again, we're going to be taking a look at the trades of the day from the Value Charts live trading room. Had another great day going on closing out our 12th week with only having 3 down days in the past 12 weeks, which is great. We've yet to have a down week, which is also good. So hopefully we'll continue to do well. We had a lot of really great trading opportunities that we highlighted and showed during the trading room. We also took some really good trades ourselves. So the first two that I'm going to show you are actually what I consider the trades of the day, and these are just my favorite trades from the day. The first one is in the Japanese yen. We had a short with an opportunity to take out around $800 a contract or more if you're continuing to hold it with a break-even stop. As you can see, we took a nosedive here. We got short up where this red arrow is off of a bearish divergence on a 15-minute chart. And what a bearish divergence is when we have higher prices compared to the previous high and a lower high indicator. So you can see this right here is our first rally, and then this is the second rally where we barely eclipsed the previous high. But if you looked at our MQ momentum indicator, we had a lower high on the histogram and on the indicator line. So we got short, only risking about $200 per contract. The market ended up selling off. I actually got stopped out with a trailing stop right after it rallied right here at about plus 400 a contract, but it did continue to go lower, and I know several people in the trading room ended up taking out around $800 a contract. And I also know of a few more that are still holding at break even over the weekend to try to catch the rest of the yen downtrend if it continues to head lower over the next few days. Now the next trade that I'll highlight is actually a series of trades. Once again, it's in crude oil. We've been doing a great job trading crude oil over the past few weeks. Many of the trade of the days are from crude oil. So we've had several that were up and down today, where it's both up and down trades. The first one is a long at this blue arrow. That was off of a bullish divergence where we had lower prices but a higher low indicator on a 1-minute chart. We actually covered that and talked about shorting it. I didn't actually take the short. We had a bearish divergence there off of a 1-minute chart as well. I covered my long there. It ended up selling off. I know a couple traders actually took the short, sold it off. We bought right back in. As soon as it got right back near those lows, we got in almost at the bottom off of significantly undervalued prices on a little bit of support. We took those longs, we covered them and reversed position at this first red arrow here, and then we highlighted shorting opportunities here and here. Off of each of those had bearish divergences on a shorter term time frame. We also had nice candlestick reversal patterns off of a 5-minute basis for a short right here, one right there, and then one again at this arrow here before it ended up selling off. Now let me drill down. I'll show you on that 2-minute chart where we saw these divergences for these 3 trades, because they're actually very, very good textbook divergences, worked out very well in our favor. The first one, you can see the first red arrow, we shorted because we had higher prices, remember, eclipsing the previous high. But if you looked at our MQ momentum indicator, the momentum had died off significantly. So we were also moderately overvalued according to value charts. We were lower high on our MQ momentum, and then we also had eclipsed the previous high. That would have gotten you short at around 96.55. The next opportunity we had was a second bearish divergence here, where once more, here's that first rally, and then we had it sell off, and then the second rally. The second rally, if you look at the histogram on MQ momentum, we had a lower high on the momentum histogram, which gives us the okay to go ahead and sell. That would have gotten you short at around 96.51, 96.50, depending on how fast you were with selling or if you were using a limit order. The last opportunity we had to get short was right here. That was actually overvalued if you use a 5-bar analysis period with value charts. You can see moderately overvalued, just about equal highs, just a couple ticks below the previous high. If you look at the momentum histogram, again, significantly lower high indicator right there. That would have gotten you short around 96.37. That would have put you in great position to take advantage of this huge sell-off that just happened, that we're rebounding from right now. At the bottom at 95.30. So even if you got in on the last short opportunity we talked about in the trading room, that would have gotten you over $1 a barrel, which is over $1,000 per contract in profit, which is great, just depending on whether or not you actually took the trade and if you left it in break even or covered as soon as you hit undervalued. We'll continue to follow these markets. I hope everybody has a great weekend. Tonight we're going to finish up day 2 of the value candlestick reversal course. I know a lot of people are looking forward to that. It's a really great time. We had some great candlestick reversal trades based off of the patterns that we study. Some of those, just for example, we had a long in the British pound that we covered this trading session, and that was from 2 days ago. We had a nice yellow tip doji, and it reversed exactly how we wanted it to. We also had a nice reversal in live cattle today off of an hourly chart. We had a yellow hat doji, and it fell and sold off very nicely from there. So we'll continue to follow these markets. Like I said, hope everyone has a great weekend, and until next time, happy trading.